Good morning. It's already mid-June, and we had a decent week again in the grains. July corn up 2, July soybeans up 12 as renewable fuel standard was much better for farmers and demand for soybeans than people expected. July Chicago Board of Trade wheat, the only grain that was lower, down 11 cents. July Minneapolis, the opposite direction, up 10. And look at the crude oil up $8.40 as Israel attacks Iran. And you might as well say the United States attacked Iran because, of course, we are right there with Israel. August gold, shockingly higher, up $106, actually up almost up 2 strong weeks in a row. And the US dollar continues to go lower, down 572. A lot of bullish things here, but one thing that is not bullish is the state of the US crop. Actually, corn now 97% planted. That's equal to normal. So it was mostly an early planted year. Crop conditions improved 2% to 71%, good, excellent. That's a 183.65 bushel yield, up 1.2 bushel this year or this week on ProgressiveAg yield models. That's basically equal to trend. Soybeans 90% planted, 2% ahead of normal. Conditions improved 1%. Our yield model up 0.58 bushels. Not quite at trend, but close. So despite early planting, we only have an average crop of corn and soybeans, but this week both of them improved. Soybeans a half a bushel, corn 1.2. And actually, as long as the crop improves, it's very hard for the market to rally. So it's impressive that it did this week. USDA, of course, is quite a bit higher, and I've already highlighted how bullish that is in soybeans. Soybeans, I think, is the most bullish market, but we have to do something to this crop to trigger a big market rally. It's just not going to happen while the crop is improving. Hybrid spring wheat improved 3% ratings this week, although they're well below at 53%. Good, excellent rating, well below last year's rating of 72. So the spring planted crops are average at best, below average in spring wheat. Winter wheat conditions, though, were 54%, up 2%. That crop is improving. Our yield model up 0.39, highest yield of the year at 53.53. USDA is under 52. So there's nothing bearish so far in the 25 production season. Things still, planting progress is good. Crop is average, basically, spring planted, but, below average spring wheat, barley. But actually, there's nothing hurting the crop right now that we can visibly see. Topsoil moisture, 79%. Adequate surplus, 3% higher than last week. It's a little lower than last year, but that's a pretty high rating, 75%. Subsoil, 3% higher this week as well, versus 81 last year. So there's no problem. But the thing that is out there is there's a lot of bullish things outside the grain markets. And so the demand, for example, U.S. ending stocks, USDA had their June report this week. Ending stocks cut 50 million bushels in corn to 1.75. Soybeans were unchanged, 295. Wheat cut 25. Actually, a friendly USDA June report for corn and wheat, neutral soybeans. World ending stocks cut more than the trade expected, 2.6 million metric tons corn to 275.2, 2.9 in wheat to 262.8, up 1 though in soybeans. So soybeans kind of had a bad day that day, but actually this USDA report was mostly friendly. And that means demand is relatively good. So you see where the markets have been going. Corn been sliding down until this week. But wow, you got a nice downtrend. Actually, we have said we want to buy back 24 corn sales between 430 and 440. We hit that this week. And actually, we need to get more aggressive. And what I would suggest is buying half of it back in corn and half of it back in the soybean market, because I think soybeans is a more bullish market. And you can see that on the charts as well. But I think we should buy, at the very least, half of it back with soybean calls, half of it back with corn calls. Now we're trading corn at 444. I'd like to get back into this under 440 to make that purchase. Maybe you even want to buy all of it back in soybean calls, but I'd like to own a little bit in the commodity that we sold. But corn is not as bullish. You could see the sliding or the downtrend that we had in corn, and but I think that we're near the bottom of the year. Bottom of the year, 430 or 420. So I think between 430 and 440, you can buy the corn market. Actually, a spec trade, you can buy corn. Look at the soybeans, though, much more positive. A big update on Friday with that renewable fuels announcement. But quite honestly, this soybean market is in a bull market already, which is why we would be more interested in buying soybeans. The wheat market had a good day, up day on Friday, but the winter wheat was down for the week. But look at the spring wheat, much stronger. Excuse me, this is actually back to the soybean market, but the spring wheat is much stronger. We're seeing some strength there, and actually, there's our spring wheat chart. A much stronger market is rallying, much stronger. You're already in an uptrend in the spring wheat market. But look at this market, crude oil. Israel attacks Iran. Crude oil spikes sharply higher, $5 on Friday. But we already had an uptrend going. Somebody knew that there was a lot up there in that Iran market. Actually, as it turns out, the deep state wins. Israel has wanted the United States to go to war with Iran for 1 or 2 decades now, and finally they convinced the United States to go ahead. Trump resisted, but it looks like maybe auto pen when it comes to the military is still in play. They basically had Biden read off a teleprompter what they were going to do, and it appears they're still able to do what they want. Trump campaigned on ending wars with Iran and Ukraine and Russia, but actually nothing but the opposite has happened so far. So very interesting, but crude oil has gone from the low of the year to the high of the year very, very quickly here. And wow, a lot of excitement there. And, think about the biofuel part of ethanol and the biofuel, soybean diesel. Certainly with crude oil rallying like that, that's a much more bullish scenario. And look at the gold market rallying back up, probably going to run to new highs again, as gold has done over the past year. So the other market that is very bullish here is the dollar. You look at the nearby, the dollar has gone to new lows for the year. Dollar continuing to plummet. Wow, that is a very, very interesting development indeed. Now, on the weather front, we have nothing bullish in the grain markets to trigger market rally, although the outside markets are all screaming that the market should rally. The dollar's weaker, gold is higher, crude oil's rallying, everything's rallying except the grains, because the grains improved in crop condition last week, and you can't rally grains while the crop is improving. Here's the weather forecast. We're going to have some heavy rain here, southern Minnesota and Iowa, but you've got a pretty decent week of rain everywhere but the west. The west all of a sudden turns dry. And look at the forecast, 6 to 10 day. You've got some below normal moisture, below normal rainfall coming in to the United States, starting from the west. And if you go forward to temperature, you're seeing some heat now forecast in the 6 to 10. Heat actually initially, it's been so cool this spring, heat initially actually might be bearish. But if you start sliding in this dry, warm, hot, dry forecast starting in mid-June, that perhaps is the most bullish scenario you can imagine. But it's just starting. And we have high soil moisture. So this market is a powder keg. It's waiting to explode higher. We're at 3-year lows. We've dropped for 3 years. Prices are at historic lows. If you look at it compared to gold values, we're way below historic lows. And so this market just needs something to light the flame, the bullish flame. And during the summer, you have to hurt the crop to do so. We haven't done that yet. And so the market is still sliding lower. But I can see a lot of bullish signs on the horizon. And you know that weather is going to turn adverse. In fact, we have it in the forecast, in the 6 to 10 forecast right now. So I think it's probably time that the market slides into new lows in corn in that 430, 440 range. We're going to have to buy back at least with call options. Put those call options in place so when the market rallies this summer, not if, it will rally this summer on incremental weather at some point. When it does, it's going to rally hard because the outside markets are all pointing higher. And so it's just looking for the spark to ignite the rally. And maybe this warm, dry forecast is going to do it. A lot to think about. Hope you have a great weekend and good marketing.